Top business stories live from the Sky News City studio. Wage inflation remains at record levels, intensifying pressure on the Bank of England. Playing for the Ashes and running a business. We'll be speaking live to England's Stuart Broad about his career as a small business owner. And pensions revolution. What are the Chancellor's plans to reform the industry mean for investors? Good morning, this is Business Live with Ian King. Now, wages continue to grow at a record pace during the 3 months to May, maintaining pressure on the Bank of England to continue raising interest rates. The Office for National Statistics said that regular average pay, which excludes bonuses, grew at an annual rate of 7.3%. That was unchanged from the 3 months to the end of April. The news has sent the pound to a 15-month high on the foreign exchange markets. But the unemployment rate unexpectedly rose from 3.8% to 4%. Well, joining me now is Raoul Perel. He is the director of the Centre for UK Growth at Boston Consulting Group. Raoul, good to see you this morning. Not what the MPC would have wanted to see.
No, definitely not. I think they were hoping for a bit of moderation in wage growth and obviously, as you said, maintained at record levels. There are a couple of chinks which they'll be pleased with. Vacancies came down quicker than expected, but still over 1 million vacancies, so well above what they want to see. And as you said, there was an increase in unemployment, which will give them some hope because it came from inactivity. So people moving out of being inactive back into the workforce and looking for jobs. So that helps a bit on the supply. So a little bit less demand, a little bit more supply. So a little bit of something for them to see moving, but on the whole, not yet having an effect on wages. So they will still be concerned.
Yeah, I thought that fall in the inactivity rate was really quite striking. I mean, it's off by 4 percentage points, or 0.4 percentage points. It's quite striking.
Yeah, it's quite a big drop. I think the biggest drop in 15 months or so. So definitely good to see, and it's been a real concern. And I think if you look the UK compared to other countries, one of the big differences is the rise in our inactivity rate and the permanence of that rise. And now we are seeing that come off. So that will give some hope both to the government and to the MPC.
Why do you think the inactivity rate is falling? Because obviously it crept up and a lot of people said that was due to more people going long-term sick post-COVID. Is this evidence that people are being driven back into the labour force by the cost of living?
Yeah, I think that is a big reason. We're not yet seeing the long-term sick come down, so that's not a good thing. We do want to see that come down, but that is still remaining at near record levels. What we are seeing, though, is retired people, parents, others who weren't looking for work, now looking for work again. So clearly, I think the cost of living pressure, other pressure on households is bringing them back into the labour force and wanting to find paid work.
And as you say, the unemployment rate crept up. I mean, it kind of implies that the people coming onto the jobs market are not necessarily the ones able to fill some of these vacancies.
Well, quite. And we see a lot of discrepancies in sectors right now. In the professional services, technical services sector, wage growth is going 10, 11%, and the vacancies are even higher. And so we don't see a lot of people filling those jobs, same as in information and communication. What we do see, though, is in hospitality, accommodation, food, much lower wage growth, much fewer vacancies. So there is probably a mismatch in the people coming into the market, as you say, as where the jobs are.
Yeah, you touched on vacancies. I mean, down 85,000 in the quarter, but still above 1 million. I mean, this is extraordinary when you've got an unemployment rate this low.
Yeah, it is really. So, as you say, there does seem to be that mismatch. We're not quite getting the skills right. Again, when you come to immigration being at record highs as well, and we still have those vacancies. So it is surprising that there is just this mismatch. And it feels quite structural for the UK now. If you look at some sectors, education, social care, healthcare, there are those long-term problems in terms of getting workers into those sectors, even though we are bringing in people from abroad. And I think that is really playing a part in making this 1 million vacancies quite entrenched.
Yeah, I mentioned the fact that sterling rose on the back of this news. I mean, everyone assumes that this gives the Bank of England no choice but to move again on August the 3rd.
Yeah, that seems to be the feeling. And you've seen in the run-up to this as well, market expectations of where the bank rate will peak have gone up quite significantly. We're over 6.25, 6.5% at times. And so clearly people are baking in a lot more rate rises. And I think there's a sense that the Bank of England, just feels it has to do something. It feels a bit out of control. It feels a bit like, getting a lot of criticism, as we've seen, a bit behind the curve. And so, the previous 0.5% rise and maybe even another 0.5% rise to come to try and send the message that they can do something, they will take action. That kind of feels where we're in at the moment.
Except that wages and employment are lagging indicators. Is there a case for the bank holding fast for a while?
Yeah, look, I think there is quite a strong case for that. We've probably felt maybe 1.52% of the interest rate so far. It's quite laggy in terms of the time it takes to pass through. We haven't seen the full effect on mortgages either, and that side of things, or on corporate borrowing. So a lot of this stuff is still to come. So whether they should sit tight and just wait for what they've done so far to have an effect is quite a strong case. But I think just the public pressure they're under, the criticism they're getting, there is a sense they feel like they have to do something, which isn't necessarily the best way to make monetary policy, but it is kind of the reality of where we are at the moment.
All right, Raoul, good to talk to you this morning. Thank you. Now, as if the Nottinghamshire and England cricketer Stuart Broad wasn't busy enough right now with the Ashes. The pub he co-owns, the Tap and Run, reopened last week after burning down last year. He's also working as an ambassador for the accounting software group Sage, which has just launched a competition as part of its partnership with the 100 Cricket Tournament, in which one lucky small business owner will win free advertising and business advice worth £60,000. And I'm very pleased to say that the England cricketer and owner of the Tap and Run pub, Stuart Broad, joins me now. Stuart, good to see you this morning. What made you want to go into the pub sector?
Great question, actually. A great friend of mine, Harry Gurney, came to me years ago, in 2016, and his local pub had come up for sale and asked if I was interested. We'd talked in the change room a lot. I was a teammate at Nottinghamshire with him about business, and that was something that we really wanted to do. And we've evolved a huge amount over that time. It probably started as a little bit of a hobby for myself, and Harry definitely saw it as an avenue as a career after playing cricket. But the business plan's evolved a huge amount, and we're very clear that we want to be a growing business now and collecting a few different pubs along the way, and delighted that we're here at the Tap and Run, having been rebuilt after a devastating fire a year ago, and it looks absolutely stunning. So delighted that we're back up and running here.
It does look very nice from here, Stuart. Was there any doubt in yours and Harry's mind when the pub burned down that you were going to have to reopen it? Were you tempted to walk away?
Yeah, great question, actually, because I remember so clearly. It was during the Trent Bridge Test match, and Harry called me at 5:30 in the morning saying that the pub was on fire, which was obviously a huge shock. And I had to play the rest of the Test match. So the day after, I came to the site, and it was devastating. It was a complete write-off, really, and could only look through the windows because of the damage. It took 8 fire engines to put the blaze out. And I was quite emotional at seeing it, and my business partner Harry, I was sort of quite interested to see what his views were, and he was so positive straight away. Bear in mind, this was 2 or 3 days after the fire. He had no doubts that he wanted to build it back, bigger, better. We've had amazing support from the local community, and ultimately, when you own local pubs, that's what you're doing it for. You want it to be a community for people to enjoy each other's time and meet different people. And Harry was so driven and so positive about what we could do to make the business even better, and it's come to fruition. I mean, it's so special being here and seeing the plans come to place. I've been open 10 days now, and we've been amazingly supported, not just by the local community, but from people travelling afar as well. So no, there was a bit of doubt in my mind with the emotions initially, but Harry doused those and has been hugely positive.
You mentioned you've got plans to open a few more establishments. I mean, one of the big challenges that all small businesses have is access to credit. Do you think that's going to be a problem for you down the line?
Yeah, I mean, one line that Harry and I always use is, we have to be cautiously optimistic in this industry. It's a fantastic industry to be a part of, and Harry runs it day to day and has learnt a huge amount over the past few years, particularly after finishing playing cricket. But one thing that we love about the industry are the people, and I think that's where it's so similar to sport. Is sport a lot of the time, especially playing a team sport, is about the people involved and the culture involved in it, and the pub industry is exactly the same as that. I think it's quite difficult to look too far ahead. Obviously, we have a business plan of how we'd like things to go and grow the business, whether that's 5 pubs in the next 5 years or 10 in 10. But we need to just see how the opening of the Tap and Run goes over the summer, building up sort of finances and looking to the future. We've got a pub near Rothley in Leicestershire called the Griffin that's been doing fantastically since December when we took on. So there's definitely a mindset for growth, but we also have to be a little bit cautious in the pace in which we do that, because ultimately you don't want to ever put any quality in doubt, and it's important that we get the quality spot on here before we look to grow.
Absolutely. Now, you've got a week off or so before the next test at Old Trafford. One thing that's been raised, I mean, you've had a fantastic series so far, top wicket taker, but England's catching's left a bit to be desired at times. Is there going to be an extra catching practice?
Yeah, it's a funny one. You know, we've been excellent over the past year with our catching. We've put a couple of catches down in this series. Unfortunately, at Leeds, it didn't hurt us too much. Managed to win a game, and to be honest, having played in all 3 Ashes Test matches so far, it's been breathtaking stuff. It's been very emotional to play in. It's been very tiring, but it's been incredible cricket. You know, I think every single game the results could have gone either way, and when cricket is so close like that, you do start to look at certain different things in your game that you can get right. And you know, we know a couple of catches and mistakes have probably hurt us in the 3 Test matches, but we've got 2 to go. You know, we need to win both, and we feel really positive about that. Catching is such an interesting one for me, and having played a long time now, it's almost the more you talk about it and the more you practice, it becomes a bit of a mental thing, and you focus too much on it. The key to catching is staying very relaxed in the shoulders and very relaxed in the hands, and things just happen naturally. So I don't think we'll talk about it much to the team. We just have huge faith in each other's ability that when that chance comes, we'll take it. But it was, looking back to Sunday, it was just breathtaking stuff to be a part of. My nerves, I mean, I'm 37 years old, but I don't think I've ever been as nervous as I was on Sunday afternoon. So nice to get through that. We've got a few days off, meet up in Manchester on Saturday, rest the bodies a little bit, and you know, it feels like there's a bit of Ashes fever around the country at the minute, and we need to jump on that bandwagon and keep playing good cricket.
Absolutely. I mean, it was great seeing you getting in the Aussies' faces at Lord's after the Bairstow thumping incident. But, I mean, Gideon Haigh, the Australian cricket writer, wrote in the Times today that, you know, you're the man that the Aussies love to hate. But he said he gets the sense that you're actually the people that a few Australians now might hate to love.
I must admit, yeah, sometimes I like to just get in a little battle for myself. I knew that it was such an important moment of that game at Lord's, and I need to make sure I was mentally switched on and able to do a job for Ben Stokes at the other end. So part of my strategy really was to pick a fight with a couple of Australians, so I wouldn't be focusing on too much technique. I would just be focusing on the ball and making sure I could stay there. So yeah, I mean, part of Ashes cricket and the rivalry, the history of it is very much a great battle out there, and both teams have been really stuck in this series. But it has been, you know, a lot of the players know each other very well. There's a lot of sort of talking and smiles. We lunch in the same room. You know, it's not as if there's a huge battle going on off the pitch. It's just you're playing for your country. I'd expect nothing less than showing a huge amount of passion and pride. And you know, just from being on the field all the time, the energy I'm feeling from the crowd and from the supporters and from the cricket fans around the country has been magical. So you know, we'll keep trying to entertain and put on some brilliant cricket for people to love, and keep letting us know that you're enjoying it.
We will indeed. Stuart, pleasure to talk to you. Best of luck for Old Trafford, and best of luck with the tap and run too. Thank you. Well, the pound rose to a 15-month high against the US dollar after the wage inflation figures out earlier this morning. Sterling currently now trading at just over $1.29. That's up 0.5% on the session. It's up by roughly the same amount against the euro. Single currency, meanwhile, more or less unchanged right now against the dollar. On the equity market, stocks in the Asia-Pacific region enjoyed a solid session overnight after last night's gains on Wall Street. All of the main indices in the region finished in positive territory. The Nikkei in Tokyo posted its first gain in 6 sessions. Well, in Europe, stocks are also largely in positive territory right now. There's the current picture. Talking points today include Daimler Truck, which is ahead by just over 1% in Frankfurt on a trading update. Here in London, the FTSE 100 also in positive. Well, look at that. It's just nipped into negative. It's more or less unchanged, right? It's just about a fifth of 1% lower right now. I think the stronger pound is probably weighing on some of the big foreign currency earners, the healthcare stocks in particular, weighing on the index. There are not many specific features for investors to get excited about in the main index today. Outside the FTSE, there's more going on. The car parts maker Dowlais is off nearly 7% on broker comment, while Pennon Group, the owner of South West Water, is off by 0.5% right now. That's after it paid £85 million for 3 new renewable energy generation projects. The business recovery specialist Begbies Trainer is off 1.5% on its full-year results. To the upside, the house builder Galliford Try is ahead by 2.25% right now on a trading update. The oil price, well, that edged higher this morning. It's trading in a really tight range right now. A barrel of Brent crude will currently set you back $78, 1 cent a barrel. That's up a little over 0.2%. Joining me this morning is Roger Lee, head of UK equity strategy at Investec. Roger, welcome to you. It's all about inflation again this morning and those wages numbers.
Oh, absolutely. It's all about inflation. It's all about where interest rates will end up. And that seems to be affecting, sterling, as you just mentioned. I mean, that's clearly having a positive impact on sterling in terms of higher interest rates for longer. And again, as you've already mentioned, I mean, the market's now anticipating interest rates going to 6.5% now in the UK, which, is obviously would be of concern to most people if that were to happen.
Looking at your notes, you point out that there's been a steady series of outflows from UK equity funds right now. I mean, 1 or 2 people around town are telling me they think the UK market looks quite good value at these sort of levels.
Well, I would say this, wouldn't I? But the UK market looks sort of exceptionally good value. Now, I mean, we can, that's easy to say. When that value will be crystallised is another matter. But the UK equity market, the FTSE's on, sort of multi-decade low in terms of its valuation multiple compared to where it trades. It's on a multi-year low, multi-decade low compared to the S&P. The S&P obviously always trades at a premium, but it's at such a wide premium at the moment that on any metric, the UK now is sort of back to where it was in 2000 at the end of the dot-com bubble in terms of its relative valuation to the US. And on that basis, yes, I would agree with those commentators.
But in terms of, we've got earnings season coming up for the half-year stage. How important is the earnings season for the UK market's valuation right now?
Well, I mean, I don't want to be dismissive of earnings because clearly they are very important. But I think I go back to what you just, your first question or your first comment, that really this is all about interest rates. This is all about the valuation we put on those earnings. And that's what makes this market really quite difficult for most participants, is that you're not only having to forecast where the earnings are going, but you really, really have to pay very close attention to what valuation you're going to put those earnings on.
Quite interesting to note the number of companies that are still announcing share buybacks. I mean, only yesterday, Future Publishing, big mid-cap company, announced a £45 million buyback. I mean, that suggests a lot of these companies themselves think that their stocks are quite cheap.
Yes, I think so. I mean, that tends to, well, one would like to think that management have a sense of what's value in their own shares, but history would suggest that's not always the case. But the benefit of the doubt is that if companies are buying their shares back, they obviously can see some value. And I think, that's one of the factors that's very much keeping, it is a positive for the FTSE. It's the amount of buybacks, the amount of de-equitisation that's taking place, particularly in some of those very larger stocks in the market, which have got very, very significant buybacks at the moment.
Which are the sectors that you're most looking out for in terms of the forthcoming earnings season?
Well, I mean, what really drives the market, what really drives the FTSE is so heavily biased towards those 3 sectors: oils, well, natural resources, financials, and staples to a certain extent. So it's those earnings that we are going to be looking at. And I think the backdrop for earnings is probably still reasonably attractive. One has to remember that equities, companies operate in a nominal environment, an environment with inflation. And so whether you've got inflation where it is at the moment, obviously it's a real problem for the Bank of England. But if companies are able to get these price rises through, then their top line growth could look quite attractive. And that could be the surprise going into this earnings season.
Well, we shall watch and see. Roger, good to see you this morning. Thank you. Still to come on Business Live, what do the Chancellor's ambitious plans for pension reform mean for investors and particularly pension savers? Don't go away.
gives you the very best of Sky News wherever you are. Breaking news, videos and analysis.
Evidence of the crisis.
Podcasts, watching us live.
Take you live to Manchester Crown Court.
Sky News Daily Podcast.
All in one place. And all at just the touch of a screen. The Sky News app. Download for free now.
Slide Emirates, slide better. Fly Emirates, fly better. Thank you.
Welcome back. Now, the Chancellor, Jeremy Hunt, last night unveiled a series of proposals aimed at channeling billions of pounds worth of UK pension savings towards small, high-growth companies. He unveiled a compact signed by 9 of the UK's largest pension providers, including Legal & General and Aviva, to commit 5% of so-called default funds for defined contribution pension savers to unlisted equities by the end of the decade. The Chancellor claimed it could unlock up to £50 billion worth of investment if all such UK pension providers follow suit. Joining me now is Michael Moore. He's Chief Executive of the British Venture Capital Association. Michael, welcome to you. A lot of scepticism out there that this is really an appropriate target for long-term pension savings. Give me the case for.
Well, I think when you look at the challenge facing pension savers right now, they need to generate the returns that will actually create the pension pot that will in time mean they can get as comfortable a retirement as possible. And currently at the moment, those returns are not looking great. When you look at the returns that can be generated by venture or private equity-backed businesses, then you're in new territory where you can actually substantially improve the returns on that. Now, we look at 10-year benchmarks. Those are much better for private equity and venture capital than, say, the All Share or the 250. And we think that blending in a bit more of these types of investment will do better for those returns, give us capital for investment in UK businesses, and perhaps embed some of those businesses here in the UK rather than see them disappear off to the US.
You mentioned past performance, though, Michael, but this has been an exceptional period in which we've had near zero interest rates. So VC and private equity have both done very well. I mean, there's no guarantee they'll replicate those returns in future.
Nobody's saying there's going to be guarantees, you're quite right. But what we need to have a focus on is the value of the investments over time, not a focus on the cost of that investment. We need to look at the scale of the pension investing. So quite a lot of important announcements last night about getting consolidation of the pension scheme industry. There are new vehicles to do it. So the idea of different big institutions coming together to support venture. And then the compact, 9 big institutions saying they'll up their allocation to 5% to unlisted securities by 2030. Some North American pension schemes are already doing between 10 and 30%. So I don't think that's an indication of something that is risky. This is about clever, sensible investment.
Except these big institutions don't really have much experience of investing in private and often illiquid assets.
And I think that what was announced last night is a sensible set of measures that get us on the right journey. The government's made important recent changes that mean that the cost cap on fees went away, we can now allow trustees and others to invest sensibly for the long term and look at generating those better returns that also get us that capital that we can put into the British economy.
Do you worry that this big inrush of new money from pension funds is potentially going to depress investment returns?
I think that this is not going to be exactly a rush, but a nice scaling up, if I can borrow the term, of extra capital into this area. There are lots of great professionals in the city and elsewhere who will keep an eye on that. The important point about private capital is it's actively managed. We've got a 40-year success story here in the UK. We've got the second largest hub of private capital expertise anywhere in the world outside the US. So we are well placed with the expertise to make that investment appropriately.
All right, Michael, got to leave it there. Good to see you, and good to see you in person again after a long time as well. Thank you.
Thank you.
That's it from me for now. I'm back at 4:30 this afternoon. In the meantime, do stay tuned, because coming up after this short break, we're going to be bringing you the latest on the crisis currently engulfing the BBC. At midday, we're expecting to hear for the first time from Tim Davie. He is, of course, the BBC Director General. We'll be bringing you his comments as soon as we get them here on Sky News. Do stay tuned, and I'll see you again, hopefully, at 4:30.